VIX. What does it do from here?
OK, so first of all, thank you so much for inviting me. Great to be here again. I think you're asking exactly the right question, because when we look at what's happening in markets, it's really been driven by volatility, and the epicenter of that has been around the VIX. What's been really notable to us is that volatility has been very concentrated. You've seen it in the VIX, you've seen it translate into equity markets, but you haven't seen it spill over into broader financial markets. You haven't seen, for example, fixed income volatility or currency volatility pick up. And that supports, I think, the view that this is a technical move and that we're going to see some stability return to markets, hopefully quite soon. Yep. To your question about the VIX, then, I think we need to recognise we've been in an exceptionally low level of volatility for some time. So 2017 was not normal. In fact, we got to the lowest level of volatility since the 1960s last year. The spike we've seen in the last few days, we think, is unwarranted and actually disproportionate to what we've seen in equities. I mean, the fall in equities felt pretty rough if you're in the markets, but actually a 4% fall on Monday associated with an over 100% increase in the VIX was really, really disproportionate. So calling in the short term looks tough. Our view is this settles back down. We're still in a low volatility regime.
But Richard, do you think that actually it's pent up, basically, pent up because of the quietness that we saw in VIX over the last 18 months? Or as a market change, is volatility kind of going to come back because that's how you trade any kind of uncertainty on regime change at the Fed?
I think we're still in a low volatility regime going forward. And that low volatility regime is really supported by the macroeconomic environment we're in. We think we're in the middle of a sustained economic expansion that has potentially some years to run. And if you look at the recent economic data, the recent earnings data out of the US, out of Europe, out of Asia, it's all supportive of a synchronized and sustained expansion. And we know that all significant regime changes, volatility regime changes, are associated with economic regime changes, and we're simply not seeing that right now.